Hello investors, thank you so much for joining me. My name is Michael from Deep Value Returns on Seeking Alpha. Today I want to talk about Microsoft. Microsoft just reported their Q2 results and I'm going to go through that because it was a very interesting setup. The stock immediately sold about 8% after hours, but then the stock recouped. So I'm going to go through that. I'm going to talk about how Microsoft is positioned. I'm going to talk about Microsoft's valuation and just overall that stocks don't really trade in a vacuum and other aspects that you need to think about as well. So on the surface, I think it's quite interesting because, I mean, look here at this graph, right? So in the past several months, particularly in the past several weeks, really, Microsoft has sold off approximately 15%. Now, if you think about it, right, it's just going back to the price it was in autumn. Now, compared to other tech names, particularly anything away from the mega caps, if you're looking at, let's say, the mid or small cap tech companies, man, you would just be so happy with that 15% drawdown because other tech stocks have really sold off. So it's been this huge discrepancy in the last several months between like the mega caps that have been holding up the market, and everyone's like, oh, the market is hitting all-time highs. The market is hitting all-time highs. Meanwhile, below that the top mega caps, that's five names everybody knows. Below that, it's just been, tech stocks have been absolutely demolished. And when the after hours results came out and the stock sold off, everyone was kind of like, oh my god, what's going on? But then the stock, people had time to digest the results, and as we're going to go through, they look really, really good. So here's the result, right? So Q2 22. Oh yeah, by the way, so I'm just talking about Microsoft's fiscal year. Keep in mind that the calendar year is different, obviously. So I'm only referring to the fiscal year. The fiscal year Q2 2022, the top line grew by 20% year over year. So it was always going to be easier the first part of the year with Q1. Q1, they had a really easy comp with the previous year of 12%. So in that line, the Q1 was always going to be easy. But for Q2 to report 20% year-over-year growth rate is pretty strong, having to comp against a 17% year-over-year growth rate in the prior year, prior quarter, prior year. I mean, that's a tough comp, and for them to do that, I think it's pretty astonishing. As you can see here, the guidance for Q3 is pointing to 17%. Now, let's put some numbers to this. So, if you see here, the second arrow there, Microsoft was expected to kind of be in the ballpark of mid 15%, kind of like really just in the middle there, a 15%, 16% growth rate. For their guidance to come out at 17%, it's pretty good because remember Microsoft has an army of analysts following it. It's just so for them to be so highly followed and still put out some guidance that is just eking ahead of that is and obviously they have to kind of not be too aggressive as well, because if you're too aggressive, then when you come around to report the results, you're gonna leave yourself open there. So just expertly managed. That's what you're getting when you pay for these companies such as Microsoft. What else is there here? So what I think is quite interesting is that Microsoft is just so well positioned to participate in the digital economy. Last week I was talking about the gaming side of Microsoft. I'm not going to really spend any time talking about that right now, but they bought out Activision, and that was it's going to be a game changer for them, no pun intended. But if you think about it from productivity, gaming, developers tools, if you want to analyze data, or if you just need access to cloud storage, Microsoft is like a tool on the modern productivity tools. In some way, data goes through Microsoft. I mean, it's a pretty phenomenal business. I mean, it's difficult not to be astounded by it. And as companies need to continue on their digital transformation journey, if they wish to remain relevant, there have been plenty of companies that have turned out to be just nothing more than COVID winners, So DocuSign and Zoom are the two kind of ones that I'm highlighting here today. I'm not talking about their share price. That's a different discussion. I'm just talking about the fact of the matter is that their revenue growths have substantially decelerated, whereas Microsoft is just pointing at really resistant secular growth. I mean, it's just unbeatable. Now, what I think is quite important to think about is that Microsoft Azure reported 46% year-over-year growth rate. Okay, so for digital, for companies that having to embrace data storage, that they're going for Microsoft, right? So let's just put some context to this, right? So Amazon's AWS results for Q4 are out probably this week, I think, probably on Thursday or so. So the Amazon's results haven't come out for Q4, but it's been a while since AWS has reported 40% year-over-year growth rates. It just hasn't been growing at that rate for a while. So for Microsoft Azure to put out 46%, I think that's pretty strong. I mean, it's a beast. And what else can I say? A few months back when I was following Microsoft, I wrote that one of the things about Microsoft is that if you're a head of IT, right, getting Microsoft is like an insurance policy, right? No one is going to fault the head of IT for embracing Microsoft's cloud storage. And that's the distribution right there, because it's for them. If you're the head of IT, and you say, let's go for this kind of unknown company, this unknown cloud storage. They're really, really cheap. Everyone's like, what? Because if there's any problem at all and there's an outage, who are they going to blame? They're going to blame the head of IT for picking out some small unknown cloud storage. If you're the head of IT and you say, and Microsoft's having an outage, everyone's like, all right, fine, it'll be solved by lunchtime. Let's go out for a beer. That's really how it is. It's an insurance policy, and that's why people go to Microsoft. And from AWS's perspective, they did have a 5-year head start, and it's there's the Buffett quote that you don't give Jeff Bezos 5 years head start. But when it comes to it, business is pretty damn tough. And if you come in against Microsoft IT's distribution system, I mean, it's a really tough hurdle to come across. And right as we stand right now, I don't have the results for how AWS is done in Q4, but for all intents and purposes, the Microsoft's intelligent cloud segment is now bigger and has outdistanced itself from AWS. So I mean, they're just kind of gone. So that's something to think about as well. Now, if you think about it, Microsoft is priced at approximately 32 times this year's EPS estimates. So it's not a cheap stock, right? And when you think about Microsoft, it's like a bond on the world. So you're kind of getting, let's say, mid-teens to high teens growth rates for a really prolonged time, and you're paying 32 times earnings. So it's not that, it's not a cheap stock, and it's not that cheap when you consider the overall aspect of stocks right now. So many really innovative, incredibly impressive, disruptive companies really being priced in the garbage bin right now. So you're not getting Microsoft in that context particularly cheaply. If you were to say to me, Microsoft is going to grow at approximately mid-teens, and you're having to pay approximately 30 times for its earnings for it this time a year ago, that's a different story, right? You'd be kind of like, okay, that's pretty. You have a very high return on invested capital with your buybacks, strong balance sheet, resilient growth, blah blah. But you have to take it in the context of where everything else is trading at right now. So it's kind of like, yeah. Now, last week when I talked about Microsoft, I called Microsoft a dog. I said Microsoft's like a dog. Microsoft isn't just for Christmas. Microsoft is for life. This is the type of rare investment that it truly pays to sit on one's hands after buying. And that was, probably the best way I can express myself. So yeah, I think that it's quite interesting as a stock, and hope to kind of see you around soon. Thank you for listening. Bye.